Hello, everybody. It's Joshua Hayes here at BigWaveTrading.com, coming to you with the February 4th stock market report for you to use whenever you want, because the market just keeps doing the same thing over and over, and that's going nowhere. Now, this is the first time I'll be looking at the index charts today, so you're going to be seeing it with me as I look at it first time. Once again, the market just kind of did nothing today as it fell 0.5% on the NYSE on volume, slightly above the 50-day volume average and a little bit above the volume from yesterday. The S&P 500 fell 0.75%, same volume. Let me look at the NASDAQ. Oh my, yes, higher volume, definitely distribution, but only down 0.08%, so technically it's not distribution. However, the nasty intraday reversal that shows you that the market got all the way up to 1549 and closed at 1515, which is below the 1517 open, is negative. So overall, today was a pretty bearish session, I would say. But the interesting thing is, as you can see with the NASDAQ relative strength line, still went higher, which means it, of course, outperformed the S&P 500, and that's what I like. But still, if we look at things from October 27th, you can see that the stock market has moved 0.61% in 3 months and almost 1.5 weeks now. So still overall, the market's not going anywhere. Now, however, our longs are doing great. We do have a full sell tonight, but the other 10 of our 11 longs look fantastic. And hopefully, if the market even keeps going sideways, that'll be good enough for me, because it looks like my longs want to go up. And at the same time, the 38, now 40 shorts after our 2 new shorts I have continue to look great. We didn't have any full covers yesterday. We didn't have any full covers today. Only 2 partial covers today, and one was of just a recent short that we took that we got a good fill on. So one is a big gain of over 50% that we're taking a partial cover on, and another one is going to be only a -5 to a -4% loss, depending on where you got the limit. So even though the market's going nowhere overall, our longs are doing well, our shorts are doing well for this kind of market. Would I like my longs to be doing a lot better? Of course, duh. I showed you what ANCI looked like in July yesterday, or August, excuse me, and June, and you can see how it looks like now. These kind of stocks should still be going much higher. ANCI should not be at $6, $7 right now. ANCI should be around 17 to, I would say, 18, or 18 to 21, to be honest with you, if this was a bull market. But it's not a bull market, so instead of being from 17 to 21, here it is at 7. This is why I keep saying cash is king for right now. If you are a newbie and you do not know how to short or have no track record of making money on the long side, don't short. Don't take the shorts that I short. Some are very risky. Some aren't risky. And I know how to go in at limit orders. I know a lot of you go at market orders because I have to hear the story. Well, I got the stock here at this price. And then I check and I'm like, yep, you went market. So if you have a little market, that's fine on shorts. But shorts, the key thing is to have limits throughout the area. So I want to look, when was our last full cover? Because that way I can go over it. Oh, that was a big winner. You know what? I can't even go over one because there hasn't been one in a while because all of our shorts are still working. So bottom line is, maybe on part 2 for the subscribers, I'll show you what you need to do with your limits. Really, I guess I don't need to give it here to everyone here anyway. So let's go ahead and move on. Let's look at the Dow Jones Industrial Average to see if the big caps are doing better than the S&P 500. No, of course, they are doing the worst. And so people are trying to tell you to go buy the safe havens like Apple or Research in Motion, and here I am still short those stocks from September. So while some people are out there long Apple still from last year, I'm holding on to a 43% gain, while Research in Motion is also right now 46% gain. So I'm not quite sure why people are bullish. I can see why RIM might bottom here, because I can see that the uptrend has had some higher volume bars. But as now it goes along, it's losing that green bop and it's got lower volume again. So that's not too bullish of a rally. There's not that huge accumulation that we saw like on the last stock that I went long, ANCI. See how much time we have left? Good. We're only halfway through, so we got plenty of time. There was more to talk about. If the market was breaking out to the upside, I could go in and explain to you why it's either a good breakout or not a breakout. Or if the market was breaking down, I could tell you why it's either a good breakdown or not a good breakdown. However, the market's just static, kind of moving nowhere. Overall, and I can't even tell you what it's going to do because even though I have 40 shorts, which should tell you something compared to 10 longs, my 10 longs are working while my 40 shorts are working. So I don't know if we're near the end and we have one more leg left or what. All I do is follow the trend. I do what the market tells me, and that has made me money every year since 1996. And last year was the hardest, and this year doesn't look like it's going to be any easier if you use the quote January effect, which says the market does what it does for the year, what it does in January. Whatever. Oil, as you can see, like I say, I believe it's stuck in between 35 and 50 for a good long time, and it's still here at 40. Didn't move around much today. What's more important to me is how the metals are acting. Platinum had a overall up day, up 0.4%, it shows here on the telecharts. You may have different prices. I always look at the IBD charts also to get those futures prices to see if they're accurate, because sometimes there are differences, but not a lot. So overall, kind of a bad day since it actually a good day because it opened at 961, closed at 964, but it got all the way up at 972. It would have been nice to see platinum close up there. However, it hit the lows of days at 953 and bounced right off of them at one point intraday. So it shows that these stocks can't close at their low of the day and haven't done so since October and September, and that says a lot. I mean, normally after 1, 2, 3 months, you're going to have at least one day where you close at the low of the day, the exact low of the day. However, after 1, 2, 3, 4, 5 months, we haven't had any low of the day closes on gold, silver, or platinum. They've gotten close, but they haven't done it. And as you can see, once again, silver opens at 1240, closed at 1251, up 1% today. And what do we have again? We have another, not a hammer-like pattern, but it's definitely a bullish pattern. As you can see, there's a deep tail at the bottom. So as silver pulled back to 1231, somebody was like, let's take it here. They took it here. They took it back up to 1251. And as you can see on this chart clearly, just going back to October, this looks like a low of day close for silver. Maybe silver closed the low of the day there. Nope, sure did not. So it wasn't until not even a low of day close there. So as you can see, we're 5.5 months into the silver, platinum, and now the gold market without a low of day close. Gold, once again, another bullish session. You can see the bigger tail is at the bottom, showing that whenever it fell, people rushed in to be buyers and support the stock as it came back to the 896 area, thus pushing it back over the 901 open area, up to the 907 area. It did hit 910 today, but I think pretty soon we'll be seeing gold back at 930, which is where it hit on 130. Overall, I still see any pullback in gold, silver, and platinums as a buy for long-term accounts. This is not a normal kind of quote Joshua Hayes trade where we're going long something for either a week, a month, a year, or 2 years, and we get our 300% to the biggest gain ever was the 2,390% gain in 9 months in Taser. We're probably not going to get that, definitely, so that's why we're not looking at it the same way. I'm looking at this more of you're going to put it in your IRA, and you're looking at the way that we're printing dollars. And like I said, if Honus Wagner's baseball card is worth so much, the fastest way to not make it worth so much is for there to be another like 300 million of them on the market. Then you couldn't fetch the money you could for Honus Wagner. It would just be another $1 baseball card. Probably as an older baseball card, be $10. But still, the point is, the more you have of something, and if the same amount of people want something, the less it's worth. So if there's 8 people that want one Honus Wagner card, you can pay whatever you want for the Honus Wagner card. However, if there's 8 people that want a Honus Wagner card and there's 300 million of them out there, you know, what do you think the price is going to be? That's exactly what's happening with the US dollar. They can print it to infinity, but gold, silver, and platinum, you cannot find it to infinity. It's a finite earth with a finite metal. So let's look at the United States dollar then and see how it's doing right now. And as you can see, still doing good, holding the 50-day moving average. Had a bullish session today. However, it's just not as bullish as the metals look right now. But still, if you would not have listened to everybody, and if instead you would have taken your orders with the move over the 50-day moving average, Here you are with the 16% gain. So the dollar is the strongest currency by default because every other nation is actually weaker than us, so they're still expecting dollars. However, the way we're printing this, I don't see how in 5-10 years this dollar can be higher. I pray to God I'm wrong, and I pray to God they purge the extra dollars out of our system. However, I feel safe having gold, platinum, and silver, so any pullback, I say go for it. All right, I'm going to wrap it up here. This is Joshua Hayes at BigWaveTrading.com. Aloha. Part 1 and part 2, excuse me, will be up next for subscribers, and if we go too long, we will use a part 3.